Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning market webcast. Okay, daily chart. And what we saw yesterday was we saw in the overnight, not last night, but the night before, we saw an air pocket on a break below 50. That air pocket was followed through. They headed down into the 2712 area. That was exacerbated. It went down and traded down into the 2692 and change area. That was also a test of the daily lower band. It rejected off of there. They took it all the way back up and through, all the way back up to 50 and beyond. You can see here on the hourly, it accelerated below 50. Here's your air pocket. Took it down to test 12, down into 92 quarter. They blew it at 2702. If you haven't watched the evening wrap up, check it out. They blew it at 2702. They ripped it back up to 50. Now, they traded as high as 54.75. They continue to find resistance in the 50 area. They've taken it back overnight into 2720. You got a higher low there versus here. They've got to push it up over 50 if they're going to go anywhere today. I'm watching the hourly midband to see if it wants to act as support. If it does, it's going to support price. As far as the trading went yesterday, it was a huge day. I mean, look, if it's going to go down, if it's going to do that and then do that, I mean, there's just opportunity everywhere. So we had a couple of big shorts, a couple of big longs, and it ended up being in and around 75 handles or so. Put that together with Monday. It's a big week to go with a big month. And, you know, I love fall trading. I do. And the summer was good trading, too. I mentioned this time last year that 2018 was going to be the year of the trader. And it certainly has been. And there's nothing going on in the landscape out there of all the things I look at that suggests that 2019 is going to be any different. It's going to continue to be volatile. It's going to provide opportunity. There's really no, I don't expect any periods of dead tape that are extended. I mean, the tape will always compress. That's just the reality of trading. But, you know, compression, expansion, patience while it's compressing, and then expansion into it. So, look, I expect more volatility. I expect more volatility today. I got stopped out of a long overnight, a 26 long at 36. I was not awake when it traded down to 27.20 there for about 20 minutes. It's now up to 44. It's traded as high as 46, and I could care less. You know why? Because it's been a good week, because there's volatility in the tape, that you're not going to catch every move, and after the bell rings, there's going to be more than enough opportunity to make four handles. And that's what we're about. We are about making four. And there's more than enough opportunity in this tape to make four. Look, there's always opportunity to make four, but in this tape, there really is. So our suggestion to people has been come in, make your handles, and then come back tomorrow. Don't give it back. The afternoons have been more difficult to trade than the mornings. That's pretty typical. But it's been some fantastic trading. We'll see if it keeps up. So, look, the bulls need to hold 20. And they need to break 50. So you're basically in a 30-handle decision zone here. 30 handles, 3-0. Not 3 handles, 30. So 2720 to 2750 is going to determine what happens. Now, an excellent question from a subscriber yesterday about touching this lower band. He asked me specifically about middle band. Look, you get above 50 and you seal 50 as support, yeah, it's what's next. Upper band, middle band, lower band. You know, we're kind of living between the lower band and the middle band. Nothing wrong with that. We've been living between the upper band and the middle band for years. So what we've seen now is, and I mentioned this yesterday, we have spent more time below the 200-day than we have in over a year for sure. So could this be a bear market rally to test the area of the 200-day and then fail? Sure. It could also be a really big multi-day bear market rally to test the daily midband, and ultimately that could fail. As long as we're below the green line on that chart, we are ultimately sell rallies. You can be long the rally. We were. I still wanted to be, but it stopped me out overnight. But understand that you're counter trend. Take your profits where you find them, and then, you know, don't be early bear market rallies. Don't be early short on a bear market rally. You will get destroyed. That's the tough part about down markets. All right. Everybody have a great day. We'll be out with more stuff on social. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.